Hello and welcome to Core Finance. It is Thursday the 2nd of November. I'm joined by Tim Harrison, who is Head of Wealth Management at Linear Investments. Good morning to you, Tim.
Good morning, sir.
Right, let's crack on with the headlines. Well, if you're in the UK, it's Super Thursday. Markets eagerly await the Bank of England. All about Mr Carney today. Market's a little bit quiet ahead of that, though.
Well, by looking at the statisticians, it's a 90% probability that we will see a rate rise. I wouldn't say I'm eagerly awaiting, but I think any which way it's going to have an effect on the markets, short term, both the FX and the overall FTSE, etc. But it'll be interesting to see what the comments are made at 12:30 as to any sort of guidance for the future. A lot of pundits are suggesting we are going to see a number of rate rises over the next couple of years, but it'll be key to see whether or not he alludes to anything more formal or formative than just a maybe potentially, what if scenario.
A one and done, potentially.
Yes, exactly.
Good stuff. Well, let's have a look at a particular stock, FTSE one to watch, no longer in the FTSE 100, I believe, but Karelian, what's the story here?
Well, obviously they've had a torrid time over the past couple of months. Share price has taken what one would politely say a bit of a nosedive. That being said, over the last couple of weeks, post the warnings, etc., write-downs, the company have been offloading parts of their business, non-core assets, if you like, raising a bit of cash to pay down debt, etc., etc. So it's an interesting beast. If they can get through this short-term headwind, then potentially it is one to really look at favourably. Obviously, the sector that they're in, the area that they're in, isn't particularly sexy, but it's an area that everybody needs. And with the sales of their property business earlier in the week, with the sales last week or the week before to Serco for another non-core, it's a case of raising the cash buffers, paying down the debt, and surviving this short-term blip, if you like. With new management installed and new guys and girls running the company, it could be an interesting one over the next couple of years if they stick to shrewd management of the balance sheet. The problem is they've obviously got a huge amount of debt, which if the banks do decide to be unfavourable, could cause some real issues for the company.
So, I mean, is it a stock investors should potentially be looking at, or wait until they get through this transition stage and see what happens?
I'd say it's a bit of a basket case at the moment. It is clearing the waters, so it is one to watch. That being said, there is a lot of chatter going around that they could be an M&A target. Now, obviously, that is almost a given when you see a share price do what it's done. But again, I personally wouldn't say jump in. But if you have the appetite for a bit of risk, then it could be one to stick in the portfolio under the mattress and leave for a couple of years, because you never know, you could make some serious gains if they manage to sort out their problems.
Fantastic. Moving on. Well, let's have a look at the pound, the Great British Pound, 132.38, around that 132.40 handle. And Euro sterling at 87.89. But all quiet on the Western Front. Again, it's the Bank of England. We'll see what comes out. I think cable's probably priced to disappoint. If Mark Carney doesn't deliver, we could see that trade a lot lower.
I would say so. You would say that it is at the upper end of its range at the moment. So I would say the upside is limited short term towards the 134 level. I would say is the top end of its range. If we do see Carney disappoint, as you point out, then you could see some real weakness within the currency. Again, short term, so it's a trader's market today. You're going to be buying the fact or selling the fact, so to speak, at 12 o'clock, 12:01, if you like. Again, it could be pretty aggressive on the downside if Carney doesn't, sit in that 90% bracket that suggests a rate rise is the right thing to do.
Understood. And let's have a look at a broker update. Fevertree. We talked quite a bit about this on the show previously. RBS, Royal Bank of Canada, saying it's now a sector perform. So there's a little bit of a downgrade on a stock that has been performing very, very well.
Well, who'd have thought when they listed a couple of years ago that these sorts of businesses would grow so fantastically well? I mean, Fevertree as a stock has just gone through the roof, and as they've grown, as the share price has pushed forward, as the business has grown, they have diversified away from fancy tonic into other areas. Don't get me wrong, but again, it's not as diverse a business as, say, Britvic or something along those lines. That being said, at the moment, obviously the craft ales businesses out there seem to be doing very well, and the niche drinks companies are doing very well. So it's one to. I mean, I like the business, but at these levels, I do think they have come a little too far too fast.
Understood, from a man who likes a tonic every now and again. And the core number today, 10 billion. I briefed you before we came on air as to what this is. This is the ad revenue, $10 billion in the last quarter from Facebook. That's an incredible number.
It is, but it seems that the street's a little disappointed on the back of these. I mean, look, Facebook as a company has really been a bit of a roller coaster for the shareholder. Obviously, when they IPO'd, there was a lot of enthusiasm, a lot of excitement. That was initially great, and then it got sold down aggressively as they were trying to work out exactly what is Facebook as a business. How can it make money? They've turned the corner. I know Mark Zuckerberg's been lampooned for not attending Congress over what's been going on with Russia, etc., etc. But as a business, it's turning it into a money-making machine. So again, IT, Internet of Things, etc., is the future. As we know, Facebook seem to be leading the way. But again, if you put them into the FANG stocks and the others, if you like, the companies like Twitter, for example, have all turned that corner and all starting to push forward, some quicker than others, but it's the tech-based businesses are doing very, very well, and Facebook is one of those leading the charge.
I mean, does it feel as well with these companies, they need to, once they float, they need to change the business model, they need to keep growing, they need to develop, and it is key that Facebook have bought in this ad revenue. A few years ago, you wouldn't have looked at Facebook as a place that would be seen as a venue for advertising. That's now changed, especially in the environment when the likes of ITV, etc., are losing market share on that front.
Well, it seems as though when these companies are IPO and they're coming up with the IPO package, if you like, of this is our business, as soon as they IPO, they then have investors to answer to. Therefore, they've got to monetize that business as quickly as possible and as efficiently as possible. And you've seen the likes of Snapchat, for example, the likes of Facebook, they've IPO'd, the share prices have, in a very short term, dropped back significantly as investors wonder, exactly how you can monetize a business. Facebook have come through that trough. They are now, and have been for some years, growing exponentially in terms of user base, in terms of names. But the key here is intelligence. That is what people are after. They're after what people's traits and trends are. That's what the marketing gurus are looking for to see where they can direct their ads. So it's a cracking number, it's a cracking business, and it's done very, very well.
Good stuff. And finally, well, the economic calendar, it's all about the Bank of England today.
Yeah, and then you've got non-farm payrolls, I believe, in the US tomorrow.
Yes,
is that right?
indeed.
Yeah. So, I mean, it's going to be a data-heavy 48 hours. You've obviously got the Bank of England rate decision 12 o'clock. Carney speaking at 1:30. So whatever he says will have an impact A on the FTSE, B on the currency, and then jobless claims in the US. In the US tomorrow. Non-farm payrolls. Again, you could see further clarity as to whether or not we will see rate rises in the US shorter term or into the new tenure of the new Fed governor.
And we look forward to that announcement as well later on today. I think it's Mr Powell. It's pretty much nailed on.
That's the speculation. Until it's signed, sealed, delivered, nothing's done.
Indeed. On those wise words, Tim Harrison, thank you for joining us today.